Devin Choksey is also ready, Managing Director with Choksey Securities. Devin, good morning and fantastic to have you back. Devin, in quick time, Nifty has appreciated from levels of 5,200 to 5,900. But fundamentally, with all the growth concerns, do we deserve to be at 5,900?
Yeah, Nikunj, good morning. Well, in this journey of 5,200 to 5,900, what is more important, I think, is the liquidity factor into the market, and which has got some amount of stability or a boost because of the appreciation of rupee from 67 or 68 or 69 to a level of around 60 to 63 now. So to a greater extent, I think what has helped the market, I think, to come back is largely because of the stopping of selling by the FIs, because the rupee factor has, I think, worked in their favor. That it has remained an appreciated size. Yes, I do agree that on fundamental side, I think things haven't changed beyond a point. In fact, if one looks at the advanced text data, the numbers which have come out, I think it suggests that I think the growth has been somewhere in the vicinity of around 7-8%, and that is where I think one would probably try to argue that if the fundamentally things haven't changed, I think where exactly we are seeing the market continuing an up move. There are two factors which I would like to put across, I think, at this point of time. One, the valuation, and two, I think, the stability in the liquidity. If the valuations are supportive, which they are at this point of time, maybe I think one is arguing that the worst probably is behind us as far as the corporate's workings are concerned, and that is where I think one gets a comfort level on the valuation. And the second is, if the rupee has performed its worst as well, probably, and if it is not going down further, if it tries to come closer to its real value of rupee, which is somewhere around 59-60, so somewhere in 61-62 range, rupee is also not bad proposition, and that's where I think the market could remain relatively in a positive zone. So any correction in the market in coming days probably I think would bring new money into the market for investment. I would think to probably I think put across the 5,700, 6,000 kind of a range for the market for the time being. Unless it meaningfully crosses either on the upside or the downside, I think the market should remain in this range for some time to come.
Devin, hi morning. What explains the sudden spurt in the OMC basket yesterday? HP, BP were holding up pretty well.
Well, I think, I do not know, I think, how exactly I think one should trade into this particular basket, because this is time and again I think it behaves in similar manner. One, I think most of these counters remain on a short side. It's a seller's paradise, as I would call it, I think, and most of the time whenever it goes up, I think the sellers get very active into the counters. Second thing, whenever I think you see the petrol product price hike taking place, people start calculating that now the losses would get reduced. And third most important aspect is that I think globally people are factoring that Syria war kind of a situation, though completely not out of the cloud, but at the same time it's not going to trouble I think the crude oil prices beyond a point. So if the crude oil prices remain a little bit I think on a subdued level for some time, then in that case I think the theory works that OMC should be a little bit more preferred. And due to I think the short positions in the counter, I think at times the long positions get created to ask the shorters to cover the short positions, and that's where I think technicalities of the market play around. But beyond that, I don't think fundamentally things have changed for any of the OMC companies.
Whereas you are of the view that valuations for Indian markets are looking attractive, some would argue that when earnings are contracting and GDP is compressing, valuations actually could correct a bit more, because the real pain part for the Indian economy will be visible in this quarter because of rupee and high crude prices.
Nikunj, I think if one looks into the internals of the valuation, then one probably I think gets a couple of I think immediate answers. I think the biggest amount of impact which has come, I think has or is coming, is on the banking space, and largely because of I think the mark-to-market losses that they are required to provide for the bond yield which has shot up. As far as I think the banking PSU banks are concerned, largely I think that is where probably one is finding I think quite a way down kind of an impact. Along with that, I think most of the infrastructure companies where they have got amount of borrowings, as a result of which I think their balance sheets are looking bad and I think earnings are looking weak. Now if you look at the corrective path I think which is likely to happen going forward, and that would be I think a reduction or the slash in the interest rate, I think that could possibly correct the entire situation and that could bring up the earning. Now this understanding is there with most of the analysts, most of the fund managers, and counting on possibilities of RBI's policies going forward, I think one would imagine that I think these earnings are not going to be permanently weak, and they could possibly, I think, improve going forward in subsequent quarter. Though maybe with a lag effect, I think things could improve, but they are on more of an improvement side than on a negative side. Given that possibility, one would think that the valuations are not expensive, and that's where I think one would probably put money into this market and understand if the rupee is not depreciating further, which in all likelihood I think it may stay in this range, then in such situation I think all the more reason for overseas investors to pump in money into India and to start taking the position on the long side, at least on selective basis, if not across the market.
Devin, what does one do with Rand Baxi? A flurry of bad news has always been the problem with this one, but then, remarkable recovery in the last couple of trading sessions only got sold into yesterday.
Unfortunately, I think one after another plants are coming into the problem. This Mohali plant, which was to get started with the exports, and I think that's where I think this problem has come up. I don't know, I think how much one could believe in the kind of a entire saga, wherein I think the companies keeps on claiming that I think they are not at wrong, and probably I think they are finding themselves difficult to penetrate the overseas market. In this kind of a situation, I think one would not be very comfortable taking a call on a particular company or list of companies. I think one would probably remain more confident about, I think, the fundamentals where they are established. In case of Rand Baxi, I think things are looking a little bit dicey at this point of time. Till I think it would take a little longer time, I think, compared to the earlier expectations. As far as I think the company coming back on track, would stay away from the counter, as I think have been making a point even earlier also. I think would stay away from the counter, rather concentrate on some of the promising stories like Cipla and Sun Pharma, where I think the growth prospects are emerging a little better going forward as well.
Devin, as a house, what is your number one mid-cap idea?
Well, I think we like within the mid-cap space many companies, the Kunjan. Probably I think where the conviction level is high is within some of the NBFC companies. We like two of these companies. One, of course, is IDFC and second is LIC Housing Finance. Both these companies are having a good amount of comfort at this point of time for us because they are available closer to the book value, particularly in case of IDFC. So to a greater extent, I think it is protecting your downside, offering you a margin of safety. At the same time, the revival in the economy, which is more expected in the second half now, and we are very close to starting the second half, probably I think one could find that some of the infrastructure stories would probably once again get redated, and likes of IDFC would be, I think, better placed comparatively. LIC Housing Finance, of course, I think is remaining a favorable play, more on the mortgage-based housing finance activity that they are continuing. So these two companies remain, I think, in a favorable list within the mid-cap space, as you want to call it.
Devin, what is the best way to capitalize on this year's good monsoon? Should one buy agri stocks, two-wheeler stocks, or tractor companies?
I guess Nikunj, it would be a mixture of all, I would say, because I think there is no one sector which one could buy at immediate point of time, because within agri space I think you would have several companies which are negatively impacted. At the same time, I think few of the companies may show a promise to get positively perform in the coming period. Maybe some of the sugar companies, the south-based sugar company like EID Perry, I think could be, I think, a better choice because of the sugar along with the fertilizer and the pesticides in Saber Organics. So I think that could be, I think, better kind of a company if one wants to buy pure agri space. Or even for that matter, a company like Jain Irrigation, where the prospects are improving more because of the better micro irrigation business, I think, which is happening in the economy. At the same time, the company is now having a lower debt position and they're paying off their debt. So to a greater extent, I think these two companies within the agri space would look interesting. If the interest rate wants to come down, then probably Mahindra and Mahindra, Tata Motors, Bajaj Auto kind of companies would remain in an interesting kind of a situation. So one could buy into them and build the portfolio. I think one will have to be very selective within this entire sector space to buy individual companies which are offering rather strong merits. Then only one should add them into the portfolio.
Devin, is it time yet to start looking at the banking pack? And if so, what would you recommend?
Yes, I think within the banking space, we certainly like some of the private sector banks, though they have moved up very significantly from their lows in recent past. Both ICICI Bank, even Axis Bank and Yes Bank, they sharply came back. Of course, I think the market gives opportunity at every point of time. Some correction, I think 5 to 10% kind of a correction within some counters on a given day, I think could give you an opportunity to buy them. I do believe, and I am a believer that the bank rate of interest will come down eventually. As RBI talks growth path, probably I think they will have the rate of interest coming down. Whether it happens everything on 20th September, it will spill over to some other month, etc. I think that will be a subjective talk. But frankly, I believe that I think this is one good possibility for the next quarter. So one could possibly keep an eye on some of these banks which I have mentioned, add them into the portfolio at an opportune time in the market, particularly when the market is in correction.
So at what price point you would like to buy a Yes Bank and IndusInd Bank?
Somewhere in the vicinity of 260, 270 for Yes Bank would be, I think, a good choice, and IndusInd Bank somewhere in 385, 390 range would be a good choice to add into the portfolio.
The large cap private banking basket, where are you a buyer? Are you still sticking to quality, or it is time now to go, it's now time to go down the ladder?
Well, I think the quality is available in most of the private sector banks. I think within the franchise, if you look at it, I think you find the IndusInd Bank to remain, I think, one of the best in the lot. Actually, I think less of a controversy, I think more of a stability. Even in the recent fall also, the stock has not had, I think, a larger fall like what Yes Bank had. So to a greater extent, if one wants to buy safety, IndusInd would be, I think, a better choice given the kind of an environment in which we are operating. The second one would be, I think, likes of ICICI Bank. I guess I think the bank is now reasonably stabilized as far as their operations are concerned, and are not having major threat on the NPA side either. So to a greater extent, I think one could consider that as well. Yes Bank, of course, I think has been significantly battered down, so one would like to add into the portfolio because anytime the bounce back could be sharp and it could give higher amount of the profits to the traders as well. So I think few of these banks certainly remain, I think, a favorable choice to add into the portfolio. Not that others are bad, but I think you have already seen Axis Bank has already ran up significantly. HDFC is living in its own world, so probably I think you don't try and I think buy at bargain price unless it is available, which was at some point of time. But otherwise, I think these 2-3 banks which are looking more interesting, which probably one could buy into the portfolios.
Devin, appreciate your time and thank you for joining us.